Ladies and gentlemen, crypto lovers from across the world, welcome to your favorite community call here in the Convention Center at 88 MPH. Got a big one for you today, folks. Those of you who don't know, my name is Whipper, and I'm a crypto enthusiast and a community volunteer here at 88 MPH, and I have the pleasure of hosting these calls on a weekly basis. Today, we are joined by two very special guests and two up-and-coming projects here within the crypto space. Before we dig deep into the call, I'd like to remind everyone here on stage to please keep your mics muted unless you're speaking. Our open to the public Q&A section will run at the end of the call, so if you have any questions, please feel free to raise your hand so we can bring you up on stage. As with tradition here at 88 MPH, we will be closing the call with a $100 raffle giveaway in the form of 1 MPH, as well as minting POAPs for those of us who join this call. Towards the end of the call, we have a special presentation from Ryan from Solv Finance. So at that point, I will invite everyone to join us in the community call demo channel to view the special presentation. On the agenda today, we will be discussing putting fixed bonds to work as collateral, NFTs and the hype around it, creating platforms to swap NFTs, fractionalizing NFTs and getting the most value out of your NFT holdings. Then we will proceed to our Q&A from the audience, followed by our special demo from Ryan, and then finally, of course, the raffle and the minting of the POAPs. With that, I'd like to open up the call with Ryan from Solv Finance. Could you please give us a brief introduction into who you are, how you got into this space, and what is Solv Finance?
Okay, thanks, Weber. And hello, guys. And it's an honor to participate in just this community call. And I'm Ryan Cho. I'm from Solv Protocol. And for me, I'm also the co-founder of Lagos Capital. It's a liquidity mining fund in China, which AUM around $20 million. And so I'm a player in the space which who played most of the projects and do arbitrage every day on a lot of protocols. So, and also I'm recognized DeFi KOLs in China. I have hosted a online and offline training courses in China, and the online courses is still the most popular one, which have over 1,000 subscribers. And that's the background about me. And I just joined into the blockchain industry from early 2019. And I just joined into this space as a industry researcher. So I always position myself as a deep thinker of a blockchain and DeFi. So yep, that's the background about me. And for Solv Protocol, I should say in one word, it's a minting and trading platform for financial NFTs. So what is financial NFTs? It's a NFT that represents the financial equities, just like a LP tokens by Uniswap, or like a fixed interest rate bonds by a 88 MPH, or some other NFTs that represents this kind of a financial equities. So you can we just benchmark ourselves to OpenSea, but it's more for financial NFTs. And yep, that's a simple a overview about our Solv product.
Thanks, Ryan. Let's bring it over to Jerome. Jerome, what about you? Can you please give us a brief introduction into who you are, how you got into this space, and maybe you want to talk a little bit about EthCC and Cometh, please?
Yeah, absolutely. Happy to. So my name is Jerome, and I've been in this space for 10 years, I think, something like this. Got in through mining initially because I was interested in putting some GPUs to work. Then I worked at various companies, notably Ernst & Young, Consensus, Ledger. And I created a couple of organizations, notably Ethereum France, that organized the EthCC conference and run the eponymous website, ethereumfriends.com. And EthCC is a community conference. It's the acronym for Ethereum Community Conference, which we've been running with my nonprofit since 5 years now. And I think some of you guys at 88 MPH had the chance to come to Paris to this conference this year, last July. And it's a conference where we try to keep the ambience very community focused. The tickets are pretty cheap. Everything is priced at cost. And usually you get a ratio of 1 people out of 5 is a speaker. So you meet the doers and you meet the community over there. And recently I started a DeFi X NFT project in a video game called Cometh, where you control a spaceship, you browse this, you explore the space around you, and you interact with other players to get close to Cometh or asteroids. And when you get close enough to those asteroids, you actually extract the token out of them. This video game sits on top of a blockchain service hub with a DEX, with a fiat to crypto on-ramp, and as time will come, more and more services that you can rely on. So you get everything packaged in one place and having fun gamifying those DeFi services. And the fees taken from those DeFi services are reinjected into the game. So it's a play to earn where you can have fun. And we just have started our collaboration with Yam Finance. So we have a Yam Finance spaceship collection that got on sales a couple of hours ago and is almost sold out. So pretty good operation for us, and happy to share that news with you. We are working on a new version of the game, which we will release, I hope, in early 2022 with a mobile integration and much more functionality as time goes. So very happy to be here, and very happy to learn more about all the projects that are going to be introduced here. I didn't know about Ryan's project, so I'm keen to know more as well.
Thanks, Jerome. Before we continue to dive deeper with our guests, for those of you who are joining us for the first time, I'd like to give you a quick intro into 88 MPH. 88 MPH is a protocol that's focused around fixed interest rates lending. Your crypto is put to work while generating guaranteed interest rates based on the timelines you choose. So I'd like to get into the first segment of our talk, which is around putting fixed bonds to work as collateral. Ryan, let's talk about this idea about putting fixed bonds to work and how this would benefit holders at 88 MPH.
Okay, Weber.
Ryan, you were muted there for a second. I'm not sure if you started.
Yeah, Weber. So it's my time, right? Okay. Yep. Okay. So thanks, Weber. So here we go. I should say, just like I have just mentioned, a sub protocol is a minting and trading platform for financial NFTs. So you might be curious about what kind of financial NFTs we mint and we support a trading service. So the first the first financial NFTs we have built, we call it vesting vouchers. So we use NFT to represent the vesting tokens for all of the projects, so people can just treat this kind of allocation, a NFT on our platform freely. So actually now all of you can just enjoy a kind of a ODC market on our protocol and then buy some like doodle vouchers of some very famous protocols allocation. And actually I would prefer a proposal about this on the top of these vesting vouchers as well, because I just believe that a vesting tokens can be a very nice median just between the projects and the community members. So like all of you just join this call. Actually, I do believe that you would be you are the the long-term supporters for 88 MPH. So what if you hold some vesting tokens from 88 MPH? I think it would be a better way to interact with the projects. But today, what I'm going to bring to the community is not these vesting vouchers. It's another thing that very exciting. So what is it? I just want to bring a fractionalized solution for our fixed interest rate bonds. So as we know, our bonds is empowered by ERC 721, and ERC 721 is unfractionalized. So what if if there is a user who deposit like $1 million into this fixed interest rate lending protocol for 1 year locked, and with like around maybe let's say 5% fixed interest rate, and for this user, he or she would get a NFT that represents his or her right to get back the money 1 year later, with some interest, right? So that's what happened on our on 88 MPH protocol. But what if these users would like to sell these NFTs to someone else? So actually, if these NFT are unfractionalized, no one can buy this such kind of huge balance, a kind of NFT, right? So it means that for this NFT's owner, it just cannot be it's so difficult to sell this NFT. And now in the space we can see a lot of projects are adopting a ERC20, a splitting solution for the NFT to make the NFT fractionalized. But actually, I should say it works for some assets, for some I should say most popular asset. But for some long tail assets, actually it doesn't work because just like for ADMPH, we must have some very popular kind of a NFTs that, like, if most of the people would prefer a 1 year locked a 1 year locked tokens in like on compound, actually most of the people would get a 1 year locked a compound a NFT. And actually for these kind of assets we can adopt a ERC20 splitting solution and to make these NFTs fractionalized. But what if some long tail assets? So if someone would like to sell some like a 13-month locked like kind of NFT, so it's so difficult to sell it, right? So what I'm going to bring to this community is that we would build a smart contract to help with this NFT, to wrap this kind of NFT and then make this NFT fractionalized. So then we can split this NFT into several fractional NFTs freely. So let's imagine in OTC market in traditional finance, actually how we trade a kind of commercial paper-like assets. Let's say if I hold a treasury bonds which has like $1 million, which worth $1 million. Now I sell it to like Weber, and Weber actually can buy 2 million if it's a $10 million treasury bonds. Actually, Weber can buy a 1 million worth treasury bonds from mine. So it's a kind of fractionalized trading. So it's just like I split my NFT, my treasury bonds into two fractions. One is a 9 million, the other one is a 1 million. And then I send over the 1 million, the 1 million treasury bond to Weber. So we just make a deal. So that's how we see a fractionalized solution. So we just make the NFT itself fractionalized, but not create a lot of kind of ERC20 tokens derivatives and make the NFT fractionalized. And also for our Solv protocol, we support a marketplace for this kind of a fractional NFTs. So I should say for all of you, you can just enjoy a very efficient and convenient trading experience, just like what you can enjoy in traditional finance if you adopt this solution. And also I can demonstrate how it works if possible. Yep. Thanks, Weber.
Yeah, that was amazing, Ryan. You said a lot of things there that were super, super interesting, and you kind of went really deep, which is amazing. I sort of just want to summarize real quick, and you could just let me know if I've got everything correctly. So basically, why this is important for holders of 88 MPH and people who are using the protocol is because, say you're locked into a 1 year fixed interest rate bond, so to speak, you can now sell a fractional portion of that. Let's just say you need some funds to do something, or if I understood you correctly, Ryan, there's also a platform to try to have a swapping feature where people could get out of their position earlier than the mature date. It's basically just bringing a lot of liquidity to the platform as it stands right now. Ryan, am I understanding that correctly?
Yes, exactly.
That's amazing. That's perfect. That's super awesome. Thanks for explaining that, Ryan.
Sorry, Rob, I was just going to ask, Ryan, what do you see as kind of like what would you say is the most kind of important use case for fractionalized NFTs that you can think of?
Yes, for a lot of kind of a time-locked assets like CDs, certificates of deposit. Actually, we can deem our fixed interest rate bonds as a kind of certificates of deposit. So actually, it represents a right for the users to get back the money like 1 year later or 2 years later. So, but what if someone would like to obtain liquidity before the maturity, right? So actually we need to sell this kind of assets before maturity. But the friction of the cost of the friction is so high. What if the NFT or these kind of assets are unfractionalized? So we need this fractionalized solution and to support, to help with the users to obtain liquidity.
That's awesome. So you're thinking kind of more specifically in terms of financial products. I recently read a little thing about fractionalized NFTs for real estate ownership. Is that something that Solv has looked into?
Yes. Actually, we can support such kind of a assets as well. But firstly, we would focus on chain assets before this kind of real estate assets.
Sure. Thanks.
Yep.
And I got a question for you regarding fractionalized NFT. Have you looked at
Yep.
taking for example a large trade? Like I want to swap 1 million of whatever token, whatever dollar of whatever token, and you create that order as an NFT, and you split that NFT into smaller chunks that you send to the market, so you get the trade without much slippage, eventually over multiple chains. Is that the kind of use cases you have in mind?
Yes, that's exactly. That's kind of I should say for ADMBH, what I believe, I guess the biggest limitation is that how to fix the concern or how to meet the needs for the users to obtain liquidity when necessary. Because if people cannot obtain liquidity when necessary, actually they are not willing to deposit the money into this protocol for 1 year or 2 years or longer. So actually, we need to fix up this problem. So we need to just try our best to deliver a better, I should say, a efficient way to help with the projects to obtain liquidity. So a fractionalized NFTs solution would be a good way, I think.
Yeah, interesting. Thanks.
Yep.
Yeah, like something that comes to mind is like this idea. Imagine if you put up your funds for a year, and midway through the term, you want to use those funds as collateral somehow. You might be able to borrow against it, which just makes everything way more capital efficient.
Yes. As I see, actually, most of the users of ADA MPH now actually haven't just operate the NFT kind of assets directly. Actually, so what if we use these, we borrow against this kind of NFT? Would be another interesting way to obtain liquidity. Like I deposit $1 million and then get a bonds, and then I lack of liquidity, so now I can just collateralize it on like NFT or some lending protocol, and then to take out some loans. So it would be an interesting way as well.
Right. I want to jump into the next segment of our call, which is based around NFTs and the hype around it. But before we start, Jerome, for those that haven't had the pleasure yet to play Cometh, maybe you could try to give us like a deep overview of how the actual game works. I know you started at the beginning of the call. I've personally played the game and I like it. I just started playing it, but maybe you could try to just give our listeners a little deep dive into how the game works, how users might earn money, and what sort of strategies they need to put in place.
Sure. So it's a very early stage project. So thanks for trying it out and having already some fun with it. We run a large operation last month with the Polygon Galactic Grand Prix, where we tried to run the first blockchain esport event that's quite a large scale, and it's pushing the boundaries of how many transactions the blockchain can actually withstand and how many players can actually play. So I like to present Cometh as not a multiplayer game, but a peer-to-peer game, because we are all connected to the blockchain playing together. So you acquire a spaceship. Either you got one through a promotional event, or you got a very cheap spaceship just for the tryout and evolving in the game, or you bought a very fancy, beautiful spaceship that fits the narrative of having art as digital arts and collecting the spaceships because you like Yam Finance, the collection that's going on right now, or you like Alchemix, or you like Pickle Finance, or you like StakeDAO, and so on. But there is a collecting aspect about the spaceships in the first place, and there is a gaming aspect about the spaceship in the second place. So whenever you have a spaceship, you can start playing the game. So as a player in the game, you load your spaceship in the game and you appear on a solar system. So your spaceship is orbiting with other spaceship around a giant star. There are portals you can take to be teleported in other stars with other players, other game primitives inside it. And the basic goal of the game is to observe where the asteroids are going to come, where they are going to be in a couple of minutes, in a couple of hours, and anticipate where you should be when they pass by, because you have a mining area, and if you are in the right place at the right moment, and the Cometh is passing by in your mining area, you are able to mine this comet. So we have this concept of smart asteroids, which are smart contracts representing an asteroid, and we can load them with tokens that are ERC20, ERC721, ERC1155, whatever, giving the players the opportunity to dig through the asteroids and get the token for themselves. So at the moment, we distribute various types of token inside the game. There are tokens that come from the fees generated from our DEX, Cometh Swap, live on Polygon, but also proceeds from the fees, proceeds from the sales of the NFTs that we expose on OpenSea and on our website. So as a player, you are competing against another player to grab more of those tokens, usually on the form of a liquidity pool tokens. We distribute the LPs of the DEX because the fees are collected in the form of LPs. But when we run commercial operations like the Grand Prix, the eSport tournament last July, we also distribute rewards that come from partners and people that want to expose their project inside the game. Now, if you play the game and you find it cool, you continue playing, that's great. But if you find it boring or not good enough for you and you still have the NFT and you're collecting them, you can rent your NFTs to other players. So there is a rental protocol also inside the game. So if you want to put your spaceship on leasing, you choose how many what percentage of the reward you want to keep for yourself and how many you want to give to the borrower. And the game works like this, basically. And now we are working on improving the gaming aspect of it by introducing crafting, by introducing new resources, introducing also inventories and equipment you can add to your spaceship, change their shape, change the way the game behaves for you, and also introducing the concept of a battle between different spaceships, so we can have a piracy between different players. The way we try to work this out is by opening the game to collaboration with other projects, so that you can integrate primitives from your project into Cometh, so that the players can actually use them. So, for example, allowing players to land directly on Aave from Cometh, or maybe use Solv protocol one way or another through Cometh. One thing that I would really like asked the question previously to Ryan, is how can we split huge trades into smaller chunks? Well, if the huge trades is representing an NFT, I would be super happy to have large traders flex their NFTs representing large trades directly inside the game. That would be super fun, for example. And we are extending towards a system that's a bit looking like an MMO, like EVE Online, but 2D based, and hopefully pretty soon available on mobile. So you'll have fun browsing space with your mates directly on your mobile, and having fun directly on your blockchain like this. So yeah, that's what we do with the Cometh team. Happy to answer more questions about it and explore more collaborations with NFTs.
I encourage everyone listening today to go check it out. It's a pretty cool concept. I mean, I just started playing a little bit this week. I know the game's been around for a bit. It's pretty cool. It's really interesting, and I love this concept of being able to buy ships and rent them. I even think I earned a little bit of money. I saw some Must token in my Polygon wallet. Jerome, maybe you can explain that to me. But yeah,
you want me to explain to you how you earn money?
Oh. I know you mentioned there was the concept of having to get those comments, right?
Yeah, that's right. So pretty well, if you play it right, if you get close to a comet and you mine it, the rewards are valuables. There are LP tokens. Either right now, I think the comets contain must to pickle token. Previously, it was matic token and pickle to matic token. We distributed ghost, Avigochi ghost to tokens as well. All kinds of tokens are being dropped into the game for players to compete against each other to get them. So if you've purchased a spaceship, it's likely that you also get some cashback for purchasing a spaceship in its special operations. If you put your spaceship on leasing and someone pick up the leasing contract, you'll passively earn as well some LP tokens or even some tokens in some cases. So if you have a spaceship and you are putting it at play in the game, either on staking, either on just leasing, you will be passively earning some money indeed.
I love it. I love it. Some very interesting things happened this week. We saw Visa buy a CryptoPunk for over 150K. We saw Budweiser buy Beer.eth. Obviously, this is great marketing for ETH and NFTs in general, but I'm curious to get your view on whether or not there's too much hype around NFTs right now. Are we in bubble territory, or is this just the beginning? We're just getting started.
Ryan, you wanna give it a go?
Yeah, sure. You first, and yeah.
Okay then. One of the things I like to do when I interview someone for a job that says I'm an Ethereum expert or I know very well Ethereum, I show them the block size in gas graph, so you can check it out on EthScan, and you get pretty much the whole history of Ethereum on this. And there is a slight bump in 2017, late 2017, November, December. That's the time where the network was really on heavy pressure because CryptoKitties had just spun out. And right after this, the network, the miners of the network just upgraded a little bit the block size so we could put more transaction in. So the bubble already happened once with the CryptoKitty craze. But back then it was just internal of Ethereum, like Ethereum people flexing their CryptoKitties, steering their CryptoKitties and saying my CryptoKitty is better than yours and so on and so forth and being super happy about collecting the scats. Now what we observe is slightly different. Just open the OpenSea webpage and you'll see amazing piece of art with classic, traditional finance or traditional artists or traditional actors just doing things. The watch brand Tag Heuer just did something with NFTs. Pepsi just bought this. Visa just bought that. It's going mainstream, and it's going mainstream at the right time because we have means of putting those NFTs in the pocket of the masses. I worked at Ledger for quite some time, and Ledger has millions of copies of their hardware wallet sold, and it's very customary to offer a Ledger to your loved one or to your friends and family when you are crypto and trying to get them into getting into cryptocurrency. Where NFT support on Ledger has come, so it's easy to just have a collectibles and feel that you really have it because you have it on your private key, activable in a secure location. So back then in 2017, it wasn't like this. Like the support was very poor, and now you can pretty much buy with credit card on OpenSea. So it makes sense. The capacity of the retail to get into the crypto is much better, really much better than it was before. Now, when it comes to the bubble aspects, that's definitely a debate. We've seen tweets of Ether rocks being sold for hundreds of thousands of dollars, CryptoPunks being sold for millions. So, what does it mean? What does it all mean? It's really difficult. I'm not really an art expert. I love the artwork that we do for Cometh. I collect some NFTs myself, but I'm not an art expert, so I wouldn't be able to tell you if that's really worth it, if it's just a fad or whatever. But what I think is very real is that today our lives are much more digital than they are physical in many aspects of it. I have most of the pictures that count for me, the pictures of my daughter, the pictures of my wife, with my friends and family, with the beautiful places I've been through. I have them on my phone, and they are much more real to me than many of the things I can collect elsewhere. So collecting digital goods and flexing them and having them at ends and showing them to my friend and comparing my collection to others, that's something that's much more real for me than buying a painting in an art auction, for example. So I feel very happy of having some of my favorite things digitally as an NFT. And I guess this will really speak to younger generations and people coming into coming to the world digital natively, I'd say. But yeah, I don't own any Ether rocks. I don't own any CryptoPunks, so I might not be the right target for it. But I have many spaceships, of course.
Jerome, I love what you said, and I agree with a lot of the things that you said. It resonates. And I actually think that Visa and Budweiser coming into this space is just proof of the fact that this is something, in my opinion, that's just starting out, and it's absolutely blowing up, and we're seeing it in front of our faces. But it makes great for conversation. What about you, Ryan? Where do you think we're at with regards to what's happening within the NFT space right now, and all the hype around it?
Yes, I just believe that the bubble might not burst in a long time. Because firstly, when we talk about the NFT, we have to, firstly divide the NFT into several kind of NFTs. So first, let's talk about like art or collectibles. So for these kind of assets, like especially for CryptoPunks, I do believe that it's a kind of Bitcoin in like just like Bitcoin in cryptocurrencies. Now I just believe a CryptoPunks in NFT is share the same position actually. So more and more people, and in China, people are so crazy about this kind of assets, and I can see a lot of friends of mine just tell me that they are so proud of themselves when they hold a kind of CryptoPunks because all the people are chasing these kind of assets. So yep, I just like Bitcoin. How to say the value of how to judge the value of Bitcoin because people just believe on it, right? So for CryptoPunks, actually, I think it's reasonable to just continue to just just make a bigger bubble on it. Yeah, so that's what I believe on art of collectibles, and yep, and so for in-game items. I really enjoy the XC game. Actually, I have fun in XC. So there are too many strong just players in that game. So when I would like to win actually I have to take a lot of time and also buy a lot of very expensive XC for winning. And people do have that needs to win, right? People are willing to win but not lose. So actually now people can have fun. So I just believe that for XC and like for lens, inside of the XC can be very expensive and valuable because people just have fun in the game. And I should say the most important point for game is interesting. It is fun or not. If people can have fun inside of that game, actually I think it's sustainable. So that's in-game items, a kind of NFT. So regarding the financial NFTs that what we are focusing on, actually you can see commercial paper-like assets in traditional finance has a huge, enormous volume, right? And it's even a huger than the a much more bigger than the stocks volume. So in DeFi, actually I've just written an article to explain that what actually NFTization would be the only path for the future of a DeFi. So for most of the projects, just like Uniswap, actually they will adopt NFT instead of ERC20 to build their protocol because they need to just build a higher a level financial instrument. So actually, for some infrastructure like lending protocol to support this kind of NFT assets, I should say it actually creates a lot of value on this protocol or on this kind of protocol. So yep, for financial NFT, I think it has a great potential to grow. So in terms of all kinds of NFTs, I can see the great potential on them. So yep, I just believe it would just the bubble would still become bigger in a long time in the future.
Well said, Ryan.
Absolutely. I think that maybe CryptoPunks or EtherRocks or whatever might be in a bubble in terms of pricing. It would be interesting to see if they're not. But the concept of NFTs and the fact that they're going to be used for digital ownership of everything is, in most people's opinion, involved in the space, a bit of a given right now. Like if you have a car, like a classic car or a piece of art or something like that, it makes sense to have a piece of digital ownership to represent that. And I can't see that technology just disappearing now that it's available and now that it works,
Yeah, 100%, Josh. I actually wonder how we'll be able to connect the two worlds. It's going to be super interesting. And I know that you brought up, tokenizing real estate and stuff like that. I've seen a couple of projects doing it, but I agree. It's definitely the future and where things are headed.
Well, I mean, for if you want to follow my opinion on this, like how we're going to connect the two worlds, at some point you'll be able to just connect your OpenSea collection to whatever dating app, and that's going to kickstart everything again.
Yeah, very likely. Totally.
You mean like the Instagram on Tinder, when you can see someone's Instagram, but you'll be able to see someone's OpenSea, and then they can judge what
exactly.
NFTs you have.
Do we have the same taste in NFT collections? Do we have
Imagine if you had a crypto
deep into art.
get swiped right every single time.
Exactly.
So I guess gold digger might lose its term, and you might start hearing people call NFT diggers.
Rock digger.
Yeah,
Rock diggers, and I mean it tells a lot about your obsessions, your taste in aesthetics and so on. It's pretty cool. Like I would look at the profile of someone, and I mean, for example, if someone applies for a job and gives me like, hey, these are the collection of NFT I like. Some of them may be just for the sake of flexing those NFTs, or being like, hey, I like to invest, so I collect the things that I think will be speculative and rise in price. But I can also collect and just collect for the sake of collecting, just because I like the aesthetics of it. And I would really appreciate exchanging with someone, like, hey, where did you buy this thing? Oh, I just think it will bump. Okay, cool. Where did you buy this thing? Oh, I like the artist. You see this collection he does, and I like to put that on my Twitter profile. I like to put that on my Tinder profile. I like to put that on my whatever profile. The space that we occupy in the internet needs to be claimed our own, and that's what blockchain is bringing us. And with digital scarcity, like being able to put the good NFT that you like on your Facebook page, who knows what Libra is going to bring to Facebook, and if they bring NFTs, well, that's going to be huge as well.
Yeah, that's a great point about Facebook. I was curious about that too, and I wonder how they'll be able to display the authenticity of the fact that you actually own an NFT as opposed to just grabbing an image and putting it up. I wonder how they'll sort of solve that out. One of the most important things I think, so I wanted to switch gears here, and I wanted to talk about, creating platforms to swap NFTs. And I think, Jerome, you touched upon this a little bit, but I have to be honest, I've not used Cometh Swap. I know that AMMs have completely changed the way crypto users can freely trade their assets. How do we move to a more traditional way of trading NFTs like AMMs? How can we make this possible? And maybe it's already possible. Maybe, Jerome, you can tell us how Cometh Swap works, and if that's something similar to like a Uniswap style.
Well, to be perfectly frank, Cometh Swap is just a blatant fork of Uniswap, like many of them are existing, except that we have tweaked some functionalities to fit our needs and fit what story we wanted to tell. as we grow bigger and bigger with Cometh, we know that we are going to be listing more and more ERC20s and even our own resources in the game. So it feels just right to use an AMM like Uniswap V2 to let our users trade with each other on their different resources that we'll be collecting inside the game. But now we are looking also one step further on how we can rely on this for tokenization, fractionalization of our NFTs and so on. So there are a couple of projects out there, notably, NFT20, for example. You just put an NFT inside one of their contracts, and they give you back ERC20s that represent fraction of this ERC. So now the ERC20 corresponding to the ERC721 or the ERC1155 can be traded on an AMM, and you can at any point redeem the corresponding NFT against a certain amount of ERC20. That's one way of tokenizing and bringing liquidity to your NFT. But there are other ways. Like we are, for example, at Cometh looking at how you could grind some spaceships or grind some NFTs and get some resources against that, or get a special token against that. So we create a natural reduction of the supply of certain NFTs with people that can buy them for cheap and get the token in front of them instead. It's really difficult to solve the liquidity problem of an NFT because it's naturally something that's less tradable than an ERC20. It's hard to bring to do market making for NFT. I don't know of any market maker in the art world. I'm not super knowledgeable on the art world, so take that with a grain of salt. But fractionalization and tokenization of those fractions can be a good way of approaching that. The Salvator Mundi last painting sold from Leonardo da Vinci was bought by an investment fund. So if it's an investment fund, it has shares. And if it has shares, it can be tokenized. So maybe we can inspire ourselves on what they are doing here. But if you want to check it out, Cometh Swap, it's just a Uniswap version, our own version of Uniswap, and you can trade different tokens on this as you would on other AMM, and we have a fiat on ramp you can use.
Wow, that's super interesting. So if I understand you correctly, like when you deposit this NFT, you're getting back an ERC20, and then your ERC20 represents like an LP position in the AMM.
Not really. Like the NFT20, it works like a vault. So you drop an NFT in the vault, and you get some tokens representing your shares in the vault, and you can trade those shares in the vault. So at any point, you can buy the shares of the vault on an AMM and go to the vault and give back those shares and extract some NFTs from them.
Cool. Ryan, is this the vision that you had for sort of, I know that you wanted to create NFTs and a platform to create liquidity for fixed bonds. Would you be looking at a similar solution to what was just mentioned, or did you have something else in mind, or do you know of a different vision that is easily able to swap NFTs in an AMM fashion?
Yes. Actually, my idea is a little bit different from a ERC20 splitting solution. To be honest, I should say ERC20 a splitting solution is a genius innovations. Actually, we deposit a NFT, we lock the NFT, and then launch some to create some ERC20 tokens to represent the ownership of the NFT, and then make the ERC20 can be traded in an AMM. But I should say it's a very good thing. But the only point for this, just like Jerome said, is that how to do market making, because who would like to deposit their ERC20 tokens with some like Ethereum or some USDC inside of this AMM pool to do market making? Actually, no one would like to do that, right? So who maybe the projects can incentives the market makers, but it seems it costs too much money for the projects to do that. So, and also there is another point would be the mental burden. So what is that? So if there are millions counts of a NFT in the space, and now I do believe that there might be over a million accounts of NFT already in on chain. So what if we have to adopt this ERC20 solution for all kind of NFTs, then we have to create millions counts of ERC20 tokens, and for each ERC20 tokens has its own rules or own relationship between the underlying NFT, right? So because the ERC20 tokens represents the ownership of some specific NFT. So what is that rule? Actually, for all of the users, we have to figure it out. We have to learn. We have to cost a lot of time to learn what's the relationship between the ERC20 tokens and the NFT. And also, we just curious about where can we trade these kind of ERC20 tokens, and how can we sell it directly if there's no one do market making on these kind of assets. So that's the problem. As I say, if you look at the traditional finance or kind of assets, actually we can see like commercial paper like assets, people just trade these kind of assets in OTC market, and people just place an order on OTC market, and then people can just buy a portion of this kind of NFT. So we are not adapting a ERC20 a derivative solution for this kind of assets, because if the NFT or commercial paper like assets are fractionalized itself, actually people can enjoy a efficient enough a trading experience. So like I just released a $10 million worth treasury bond, and then you can just buy 1 million from my NFT, because my NFT is fractionalized, so I can split this NFT into 2 NFT, and I reserve one and you got one. So yep, we just made a deal. So that's how we see another kind of a fractionalized solution, but might work for some long tail assets.
Yeah, and it's interesting as we start to see the price of some of these NFTs, like these CryptoPunks. I'm even starting to hear people already fractionalize ownership of these NFTs, like within these CryptoPunks. And I guess as there's more volume and more liquidity, and the price keeps going up, they will probably find solutions with these bigger NFT ticket items to build out these solutions, to make things easily swappable.
Yes. Actually, I can see 3 kinds of succeed use cases on the top of this ERC20 splitting solution. One is WOA, so Rebel XC, because XC is so popular and so hot. So just the official of XC just create such kind of vote to just deposit a series of XC inside of this vote and create ERC20 tokens. So actually it works, it succeeds. I can see a considerable volume for this kind of assets in its AMM pool. So that's the first. And the second would be the NFTX, the CryptoPunks pools by NFTX. Because CryptoPunks is so popular as well, so people can accept this kind of mental burden to figure out what's the relationship between the ERC20 tokens and the NFT, and also can someone because a lot of people just trade on this AMM model to buy this kind of CryptoPunks derivatives ERC20 shares. So if you do market making for this kind of assets, actually you can earn some money in terms of the transaction fees. So that's why for these assets still for this I should say use case still work as well. And the third would be just like Uniquely. So what Uniquely is doing is that they create a ETF. So firstly we create a vault, and then we can deposit a bunch of NFT inside of this vault. So like we can deposit 10 NFT, 20 or even 100 NFT inside of this vault, and then create a ERC20 to represent all of the NFT kind of a assets just underlying this vault. So actually, for this kind of assets, because we can deposit a lot of very valuable NFTs inside of it. So for this ETF, or I should say for this ERC20 tokens, actually it worth a lot of money. The market cap of this kind of a ERC20 might be over $20 million, or even over around $1 billion actually. So for this kind of asset, we can enjoy a ERC20 splitting solution as well.
Super interesting. Okay, everyone, at this point, I'd like to open the floor to the audience. If you have any questions for these very special guests that we have with us, please feel free to raise your hand so we can bring you up on stage. I'd like to get the Q&A out of the way first before we head on over to the community call demo room, where Ryan will be sharing with us a small presentation. So I'm going to just be scanning the audience here real quick to see if anyone has any questions so that we can bring you up on stage. We'll pause for about 30 seconds here, and we'll wait and see. Guys, while we're waiting, doesn't look like anyone has any questions, so here's what's going to happen. You'll notice just on top of the convention center in Discord, there's a voice channel that's called Community Call Demo Room. I'd like to invite everyone to head on over there so that we can have Ryan present for us. Please go ahead and head on over. Or 45 seconds to pop in. You'll notice in the voice channel here, at the top, there's a watch stream button. Please go ahead and click in there when you're ready.
Okay. So can you see my screen now?
Yep.
Okay, cool. Yeah, thanks guys. Thanks for time and patience to take a look on my
Go ahead, Ryan.
Yes. Okay. So can you see my screen now? I just turn on the page on our products.
Yep, you're good.
Okay, cool. Hey guys, so here we go. Firstly, let me show how I split a vesting vouchers first, and then I will show how I just split our fixed interest rate bonds. So firstly, for our vesting voucher is a kind of NFT that represents the allocations. So now a bunch of projects just committed to adopt us. So in the near future, all of you can just buy some very quality allocation on our marketplace. So let's look at this asset. It's a vesting vouchers. There are 100,000 Solv tokens inside of this NFT, and it's a 1 year lock, 1 year linear release. Start from 27th August, 1 year later. So this is a NFT, a kind of assets. Now I will show you how I split these assets. How I show you a fractionalized NFTs can be splitted out. So like this is a overall 100,000 Solv tokens allocation, right? I can split it into a 1,000. Like I would like to transfer this 1,000 to Weaver as a gift. So like 2,000 to Finale, or 3,000 or 88 for Josh. Yeah. So overall 3 fractions, and then the remaining balance would just change to 96K. So let's split it. So when I split it out this NFT, we will get some fractions, and the fractions are still NFT, because that's what happened in traditional finance. When we split a commercial paper and into several fractions, each fraction is still commercial paper, right? So as a commercial paper is still a NFT with some specific parameters for it, right? So let's check. Yeah, I just let me just refresh the data. Now this one, the number of this one just become 96K, and let's go back. We can see, this one, 1, 2, 3, 4. This four fractions, especially these three new fractions actually are split out from this original one. So let's click this one. This 1000 is for Weber, if you remember, right? So now I have just placed a fraction that's, if you look at this NFT calculator, you will figure out that actually it still share the same vesting schedule with the original one, right? So that's how I just show you how I split an NFT into several NFT. Because
Sorry to interrupt.
Doing good?
But I'm not sure we are looking at the right screen now, or is it just me? I'm just saying the Discord version. If you have multiple screen, Ryan, maybe that's why we don't see everything, or is it just me?
Call we're doing right now. I'm recording a call to put on our YouTube.
Okay. Thanks, guys.
Yeah.
So now
would
it's
say-
using a screen.
Have a good one.
No,
Okay.
I think Jerome's
no,
pointing out right now. All we can
Jerome,
see.
Jerome is right. Yeah, we actually can't
Yeah.
see the presentation.
Yes. Okay. I think now it's okay, right?
Now, there it is. There it is.
Okay. I'm so
Oh,
sorry.
amazing, great.
It's
That's
okay.
no problem. Happy to see it live now.
Yes. Okay. Sorry. Let me just turn back a little bit. So I just split a NFT that represents 100,000 tokens into several fractions. So if you look at this one, it's clearly start from 27 August to 1 year later. So it's a linear release. So it's a allocation that's comes from Solv. And the original number here was 100K, but I split this NFT into three new fractions with the remaining one. So like this one is a 1000 tokens, tokens fraction. So let's look at it. We can see actually it's a 1000 tokens, a soft tokens allocation, but still a 1 year locked vesting schedule, right? So I just reserve the attributes, but place the balance. So the balance should be split, should be able to split it freely, right? Because it's the balance. But in terms of the attributes, we cannot change it because the vesting schedule has been set up by the projects, right? So that's how we split a kind of NFT into several fractions. So it's I see this kind of a fractionalized solution as we cannot say it's a kind of derivatives splitting. We should say it's a NFT splitting itself, right? So now let me show you how it works. Before that, let me show you. Once we got this kind of NFT, actually we can enjoy a lot of function like transfer or like claim tokens or also
Ryan.
Hey,
Ryan, sorry to jump in just real quick. Steven, do you need to be unmuted to record?
thanks.
Okay.
Hey.
Yeah, no
Oh,
problem.
thank-
Go ahead, Ryan.
Okay. Now let's go back to let's just jump into the main topic for 80 MPH fixed interest rate bonds. So let me show you how I can make this ERC 721 assets fractionalized. So firstly, I have got some 80 MPH some certificates, some bonds already, and now let me refresh it. How to prove that? And all of these things I've just demonstrated on the Ringbit because it's much more gas efficient. And yep, wait a moment. So it seems I've connected my wallet to the Ringbit already, and it seems I have 20,000 worth a deposits a balance, and it seems it recognized by the 88 MPH product. And now I just jump into this Solv protocol. And I would like to create some, fractions for this a NFT for this bonds. So firstly, let me pick a NFT to wrap. So once I wrap this NFT, I can make this NFT itself fractionalized. How? Let me show you. So firstly, I click this a NFT which number is 145 to be wrapped. So let's click yes. And as you know, the bonds is empowered by ERC 721. So it's unfractionalized, it's unsplittable. But after I have wrap it, actually it's fractionalized now. So wait a moment. And yep, and we take 1 week to finish this demo. So it's not a perfect enough. So yep, just forgive me. Yeah. And yep, I have just created a wrap this NFT already. So let's click it. Okay, and we will see it's a 2000 it seems it's a $2,000 worth a 88 mph C die deposit. So what does it mean? It means that I have deposited 2,000 die into the compound die pool, right? So you must familiar with this. And then let's look at the parameters here. We just create a NFT paintings for 80 mph. So it's a $2,000 worth a NFT, and it's a one-time lock. What does it mean? So all of the tokens, all of the money will be unlocked by 27 July 2021. So that's the parameters for this NFT. And after when we will got 0.26 die when maturity. So that's the maturity we want. All of the parameters we want here actually. So yep, this is the NFT. Now I will show you some magic. So this is the NFT. I will split it out. Like I can split it into a 1,000 and then 100. So yep, I just split this 2,000 USDT worth or DAI worth a NFT into two more fractions and then the remaining one. So yep, let's do it.
Hey, just a quick question here, Ryan. So
Yes.
the what happened when you split is that you create
Yep.
Other small species of NFTs, basically, right?
Yes. Simply put, we create a container to contain the NFT, the bonds, or by 80 mph. And then, but
all right.
is unfractionalized, but the container is fractionalized, so we can make the container split it freely. But the point here is that the container still bring the metadata for this container. So once I split this NFT out, actually you can still find out all of the important parameters on the NFT. That's the point. We just try to reduce the mental burden for all of the users when you adopt this solution. Okay, I split this NFT into two new fractions. One is 1,000, the other one is 100, and the remaining 900, right? So overall 2,000, as you remember. Let's click this one. You will figure out that actually it still follow the same terms, and then the corresponding interest rate for this 1,000 DAI worth a fixed interest rate bonds, right? So next, I will show you how I can list this NFT to our marketplace to enjoy a fractionalized trading experience, just like what happened in traditional finance in OTC market. So firstly, let's pick up we can choose this fixed price model. So what does it mean? We can set up a fixed price for these bonds. So let's say I would like to sell this NFT for USDT, and now for each DAI, it's a $1,000 worth a NFT, but I would like to sell it for 0.99 USDT per unit. So what does it mean? For each DAI, I will sell it for 0.99. So it would be a 1% off a price. So it's a trade-off, right? You would like to obtain liquidity, so you have to set up a lower price to obtain liquidity. And now you can approve it and then list it on our marketplace, and then you can sell it. So the point here is that because this NFT is a fractionalized NFT, so when you list an order on the marketplace, people can buy like 100 DAI worth a bonds from your bonds. Actually, they don't have to buy 1,000 worth because for the buyers, they always don't have enough money to buy whole of the NFT, right? So let's do it. Let's just list it. Okay, later we can see it we can find out it on our marketplace because there's only two functions. One is dashboard. It's a place to mint out a NFT, a financial NFTs. Second, it's a marketplace. It's a place to help with you to sell or buy some NFTs. So now there are some other people. It seems there are some people have listed their NFT here already. So like this one. Let me show you this one. Let's click it and we can see some details about it. It seems someone is selling a $334 worth a bonds here, and the tokens will be the money will be unlocked by 25th August, and after the maturity we will got 0.111 a 13 a USDT worth of kind of interest, so I can buy it. So the magic here, the tricky point here is that you can just buy $1 from this NFT, and then you will have to pay for 0.99 USDT, or you can just buy 100 a DAI worth bonds, and then you will have to pay 99. So once you buy it, and after the maturity, you can earn $1, right? Because you buy this 100 worth a USDT at the price of 99, right? So or you can buy whole of it. Oh, I'm sorry, because there's no USDT in my wallet. So, but I just show you how I can buy a portion of this NFT, because this NFT is fractionalized. Yep. And I should say for this kind of assets or for this kind of solution, it's quite a critical for 80MPH. Why? Because especially for some institutions, they always deposit like $10 million or maybe larger number inside of this kind of fixed interest rate lending protocol. And what if they deposit and then there's no way to obtain liquidity, right? So what should they do? They would say, oh, I won't deposit my money inside of this a protocol. But what if they can sell this like 10,000 worth a bonds on our marketplace, and then all of you can just come to here to buy like 1,000, 1 million, or maybe 10,000. So into any balance, any balance you would like to you prefer. So things like that. I should say it's a brand new fractionalized solution. It's different from the ERC20 splitting a solution. It's quite straightforward, and also it's very easy to understand, right? But it still need to be improved, because we just take 1 week. I'm so sorry about that. And later we will just improve all of the parameters and all of the information are shown here. Okay. Yep. Any question here, guys?
Thank you so much, Ryan, for presenting. Let's open the floor to anyone who has any questions from the presentation. Please feel free to just go ahead and unmute yourself and just go ahead, ask. You guys can close the stream. I guess we can meet back in Discord.
Yes. If you do have any suggestion, please let me know. Yeah, really would be much appreciated.
I love the idea, Ryan. I think it's so super cool. I know that you and I have talked about this in the past. I love the idea and the flexibility that this gives to 88 MPH in general, allowing all of this fractional liquidity and more usability with these these bonds and whatnot. It's great. I love it. I'm super stoked and super excited about it.
Yeah, that means us a lot, really. Yeah. And yeah, we just want to try to bring a fractionalized solution to the space that help with these kind of long tail assets can obtain better or enjoy better liquidity.
Even if it's a 1 week old demo, it's pretty impressive. So congrats to your team, and I think it's a really great project.
Thanks.
Unfortunately, I have to run for dinner. So thanks for everyone for having me along Ryan. It was really great to catch up with your community and to learn more about your project, Ryan. Really appreciate it.
Yeah.
Thank you so much, Jerome, for coming on as usual. We love having you. We look forward to hopefully having you once again, and hopefully we'll learn about all the latest features of everything that you've got cooking up with Cometh. Thank you so much for your time.
Anytime, guys.
Yeah, thanks. Yeah, very glad chatting here.
Oh, and reach out on Telegram or on Twitter if you have anything to ask. Happy to take questions there as well. Cheers.
Yes.
For sure. Okay, guys, if we don't have any questions from the audience, I guess it's time for us to head on over to the final part of the call, which is our raffle. So, as with tradition here, we will be ending the call with a $100 raffle giveaway. I invite everyone to please head on over to the general chat and type in a number between 1 and 50. Please only enter your number once. The person who either nails it dead on or gets closest to will win our special prize. Josh, are you going to be sending out a message for everyone to react to so that we can also get POAPs minted?
No, I was thinking I'll just do it from the numbers. So if you write a number, then you'll be given a POAP. If you don't write a number, then you won't be given a POAP.
Okay, great. That's a great idea. Josh, can you drop me a number in our personal chat so that we can choose our winner?
Can you see it?
Yeah, perfect. Okay, everyone, you got 15 seconds to put in your number, and then we'll be choosing our winner. All right, it looks like we have our winner. Hi, Lito. Congratulations. You hit the number 17.
Congrats.
Congratulations. Please, you can either drop me a DM or you can drop Josh a DM, and we will have McFly send out the $100 raffle giveaway in the form of 1 MPH. I want to thank everyone for coming out today. This was a super, super awesome call. Big shout out to Ryan for sharing his screen and his presentation, which was absolutely amazing, awesome. I'm sure you're going to have a lot of people with further questions. Please feel free to follow Ryan on Twitter. Ryan, where else can people, obviously they can add you on Discord, but do you want to share with anyone where they can reach out to get more information?
Yes. Firstly, on my Twitter, it's Ryan Cho DeFi, and maybe I can and also for my Telegram account, it's Ryan Cho 778. Yeah, and at Ryan Cho 778. So RYANCOW 778. Yeah, you can just join. You can just add me.
If you write your details into the general chat, then people can follow. It might be easy.
Okay, no problem. Thanks. Yeah, let me do it.
All right, as Ryan's doing that, just a quick thank you once again for everyone coming out. Please feel free to join us next week as usual. I want to wish everyone a special day. Stay long, huddle hard, and keep it up, boys and girls. We will see you soon. Thanks, everyone, for coming out.
Thank you, Whipper. Motivational as always. And thank you, Ryan. That was really, really great.
Yeah, thanks. Yes, very glad call here.
If you're in China, then go to sleep because it must be very late where you are.
Yeah, it's 2:40 a.m. on my side. Yeah, but
Sleep,
yeah, I'm so excited about this call. So yep, thanks for all of your time and patience. Thanks, guys.
You spoke really well.
Ryan, we'll be in touch, buddy.
Hey, River, what were you saying? I'm sorry.
We'll be in touch by either Discord or Telegram.
Okay, no problem. Okay, hey, I gotta sleep. Hey, bye, guys.
Yeah, for sure. All right, guys. I'm also out of here. Peace out, everyone.
Peace out.
Okay.